Hey boys, I hope you're all doing good. So, two exams over for you, right? Accounts, law, both are done. Last paper of your taxation. I'm sure you all have done a great job in the last two papers. If you have not, if you have some worries, forget those worries. Take today's time, take some rest, and start over again because a very exciting paper is coming up for you, your taxation. Yes, one of the most scoring papers for your exam people, and this time's exam, like I told you last time itself, is going to be very predictable. Today, I am going to shoot a small video for you people where I'm going to do some super 30 questions which we are going to discuss together, and we're going to try to see if you're able to remember these for your exams. Yes, one small request from my side. Please look at this video after you're done with the complete reading of your syllabus, both DT and IDT. It's going to be a very short video, people. I'm not going to keep it for much longer time. We're going to talk about 30 important adjustments for your exam of Jan 2025, and we will try to see how much of these adjustments were you able to remember by the end of the video. Yes, let's quickly get into it, people. No wasting time for today. Adjustment number one. If the question is silent on the regime, if the question simply comes and says compute tax as per the manner which is the most beneficial to the assessee within the four corners of the law, always apply both the regimes and check whichever is lower. Yes, adjustment number one. Adjustment number two, the most important thing for current year's exam, if the question comes and tells you that the return was filed late, if the question comes and tells you the return was filed late, from current year you will only apply default tax regime on that question. Yes, if the return is filed late, please only apply default tax regime for the question. The question will not be applicable for alternate tax regime unless the question clearly mentions that they want to go for alternate regime. Third, and the most important amendment for the current year, people, your default tax regime related provisions. Provision of default tax regime. First is your tax rates. Help me out with this tax rates, people, quickly. You're going to recollect it along with me. The tax rates are for default regime 0 to 3 lakhs 0, 3 lakh to 6 lakh 5%, 6 lakh to 9 lakh 10%, 9 lakh to 12 lakh 15%, 12 lakh to 15 lakh 20%, and after that it becomes 30%. These are your tax rates, people. When it comes to surcharge, for the first 50 lakhs there will be no surcharge. If the income goes beyond 50 lakhs then up to 1 crore you will have a surcharge of 10%. If it is more than 1 crore and up to 2 crores you will have a surcharge of 25%, and after 2 crores it is only 25%. You don't have 37% ka surcharge. Current year, your rebate regime comes and says if your total income is going to be up to 7 lakh rupees, if your total income is going to be up to 7 lakh rupees, you will get a rebate of 25,000 rupees on your tax payables. But current year also comes and talks about marginal rebate, only applicable under default tax regime. Regime comes and says if you are going to have an income little closer to 7 lakhs, approximately up to 7 lakh 26,000, up to 7,26,000, you will come and say that I will not pay tax on this based on the actual slab model. I will surrender the extra 26,000 and I will add cess on that. This is called marginal relief, marginal rebate. If your income question comes and says the income is 7,26,000 or nearby that, then you will surrender whatever extra income you've earned beyond 7 lakhs and you will pay cess on that directly. No computation of tax in default tax regime. Yes, this is what we have learned, people. Most important amendment for your current exam, your marginal rebate. It has not been tested till now, till September also. Therefore, this will come in exam in the current year. Mark my words. Look for that income which is very close to 7 lakhs in default tax regime, either in an MCQ question or a full-fledged question. Please make sure that you apply marginal rebate concept on that. Next amendment of current year, your online winnings, people. Provisions of online winnings in the current year come and say when you have online winnings, the formula will be closing balance. Help. What is it? It is closing balance plus withdrawals minus non-taxable deposit minus opening balance. Once again, people, closing balance plus withdrawal minus non-taxable deposit minus opening balance. You cannot claim any other expenses. No other expenses will be allowed as deduction, and if the number becomes negative, assume the number is nil. If the number becomes negative, assume the number is nil. You cannot take that number itself into consideration. No carry forward of losses in the question. No carry forward of losses in the question. Yes, moving on forward, people. When it comes to salaries, the current year amendment comes and clarifies default tax regime can claim standard deduction under default also. Yes, so salaries is now eligible for a standard deduction of rupees 50,000 whether you are under default regime or under alternate regime. So please ensure in a clubbing question or any question for that matter which has the word salaries, unless the question says that the salary is computed or the salary is income from salaries, you have to give a 50,000 deduction both under new regime and under old regime. Then comes your amendment of leave encashment. Provisions come and say least of the following four. What are the following four, people? Actual received. Amendment of current year 25 lakhs. Salary of the last 10 months, which should be basic pay plus DA forming part plus turnover commission. And fourth, last 10 months average salary multiplied by the leave which is available for you based on your number of years of employment, restricted to 30 days per year. Restricted to 30 days per year. Four items, people: actual leave encashment 25 lakh rupees, salary of the last 10 months, and average salary of the last 10 months into leave unutilized available with you based on number of 30 days per year limits. Yes. Next is your amendment of RFA. The provisions of RFA come and say if you are going to have an RFA before 31st August, then you will have to apply higher charges or 15% of salary, whichever is lower. But if you are having an RFA after 1st September, then it is higher charges or 10% of salary, whichever is lower. If the question comes and says that the place was not hired but it was owned, simply ignore the higher charges and do 15% of the salary or 10% of salary. That is what the rules were. People, what is salary for you from income tax? What is salary for you from income tax perspective for RFA? Salary means basic pay plus DA forming part plus all commission, all bonus, all taxable allowances. What? Basic, DA forming part, all bonus, all commission, all taxable allowances. Yes. Remember, for your exam, no inflation provisions will be applicable to you. You can ignore if at all the question comes and talks about any inflation guidelines. If the question simply comes and says they have taken RFA from 18, 19, 20, you have to do inflation, CII and all given, ignore it off. That amendment is not applicable to you. It will apply only from next year. It will apply only from next year. So please forget those amendments for your exam. Yes. This is your amendments provisions relating to salaries. Are you with me till here, people? Quickly going forward, we are moving on to the amendments of HP. Provisions of HP, people. Some critical things which you should keep in mind. If the question comes and says there is unrealized rent, what is it? There is unrealized rent, or if you have something called arrears of rent in the question, then in that case, whatever rent you have, please make sure that you claim a 30% deduction standard. You claim a 30% standard deduction. If you get a question of unrealized rent and arrears of rent in compulsory question, please make sure that you take the rent and reduce 30% of it before you start taxing. Next, your important thing from HP provisions, your pre-construction interest. Income tax comes and says when you have an asset, a house which is bought from a loan, but the house is not ready, then from the date of the loan, to what, my friends? It is 31st March of the preceding previous year in which the HP is completed. It is 31st March of the preceding previous year in which the HP is completed. That will be your pre-construction period. Whatever interest you pay in such pre-construction period will be allowed over 5 years. Very good. Will be allowed over 5 years. Then comes your topic on vacancy loss. If the question comes and says there is any vacancy loss, people, please ignore the vacancy loss while computing GAV. Please ignore the vacancy loss while computing GAV. To find out whether your expected rent or actual rent is higher, you will ignore vacancy loss. If you find out that your actual rent is higher, ignoring the vacancy loss, you can claim the vacancy. We discussed about it in the classes also, people. Yes, what is the provision? You will take your actual rent ignoring vacancy and your expected rent, whichever is higher. If the actual rent ends up becoming higher, then you can claim vacancy losses. Final thing from your DTR provisions, people, income tax comes and says when it comes to DTR, no SOP loss can be claimable, and whatever HP loss which you have from LOP property, can only be set off against HP income of current year. If you have an HP income of current year, set off the loss. If you don't have, then the loss gets permanent lapse. You cannot set off against other heads of income, nor can you carry forward. Both the losses will permanently lapse off for you when it comes to DTR provisions. Yes or no? Yes. Beautiful, people. Moving on to the next chapter, your important chapter of PGBP. Some critical adjustments to be kept in mind. One is your employer and employee contribution to funds. Income tax comes and says when it comes to employer contribution, you have time until ROI due date. time until ROI due date. If you pay the money by ROI due date, you can claim it as a deduction. If you don't pay the money by ROI due date, you cannot claim the deduction. You can claim it in the year in which you actually pay. But when it comes to employees contribution, then it is not ROI due date, it is PF Act due date. It is PF Act due date. Income tax comes and says, if you make the payment by the PF Act due date, you can claim it as deduction or not even offer it as income. But if you don't pay by due date, then you will have to add it to your income statement. Next, people, critical provision from exam is your TDS provisions. If you get an adjustment which says tax has not been deducted, check whether the payment is being made to a resident or the payment is made to a non-resident. If the payment is being made to a resident, then disallow 30%. If the payment is made to a non-resident, then disallow 100%. Yes, sir. Yes, sir. Yes, sir. Next, if an adjustment comes and tells you that you have made some payments in cash, check whether the payment is made more than 10,000 per person per day in cash. If the payment is made more than 10,000 per person per day in cash, disallow the expense. But if the question comes and says the person is a transport operator, then look for a limit of 35,000. When you make the payments. Next, people, your important with an amendment of current year, your 43B adjustment. 43B adjustment comes and tells you that when you have any kind of payments like tax, employer contribution to funds, any kind of bonus and commission, leave encashment, railway assets use, interest on loan paid to banks, you will only get the deduction if you make the payment on or before the due date of return filings. So if you make the payment by ROI due date, you can claim as deduction. If you don't make by ROI due date, you can disallow the expense. But in the current year, if you have an micro and small enterprise, you will have to check whether the payment is made based on an oral agreement or a written agreement. If the payment is made based on an oral agreement, you have timeline of 15 days. If the payment is being made based on written agreement, it is 45 days. If you don't make the payment within 15 days or 45 days, as the case may be, the payment will get disallowed. And will only be allowed on the date on which you actually make the payment. Yes, please notice it is only for micro and small, not for medium enterprise. Medium enterprise, even if you make a delayed payment, it is okay. It is only for micro and small enterprise. Next, and the most important thing which I expect in the current year's exam, people, is your provisions relating to presumptive taxation. Income tax in the current year has come and told, if you are running a business in which 95% of the turnover is received by permissible modes, then you will be eligible for presumptive up to people, what is the number? Up to 3 crores. But if you're running a profession, then it is 75 lakhs. But if you are running a business in which no payment is happening more than 95% by permissible modes, or it is happening less than 95%, then the old rules will apply, which is of 2 crores or 50 lakhs. In question, they will not tell you that you have to do presumptive. Please watch out for the sales. When you open the compulsory question, people, always look on the right side and check what the sale number is. If the sale number falls anywhere below these numbers, please ensure that you check for presumptive, unless the question says don't do it. Please open the P&L and always check for the sales amount. If the sales amount is less than these numbers, apply for presumptives. Good enough. Super. Go forward. Next chapter of your capital gains. 2 critical things which I want you to remember from exam perspective. You may have already done the immovable property format, people, but 2 properties to be kept in mind. If the question comes and says they have paid interest on loan for the house, and the question says they've already claimed it as deduction under other heads, like HP or chapter 6A, then don't take it for the purpose of cost of acquisition or cost of improvement. But if the question says they have not claimed it as deduction, then please add it to your cost of acquisitions. please add it to your cost of acquisitions. Second, and the most critical amendment for the current year, it will be tested in exam in the current year, that if you are going to use the exemption of section 54, if you are going to use the exemption of section 54 or section 54F, in simple words, if you are going to sell an asset and you are going to buy a HP, you can only invest up to a maximum of 10 crores. You can only invest up to a maximum of 10 crores. Please make sure that you apply exemption only to that extent. So if the investment in section 54 is given as 15 crores, restrict it to 10 crores. And if the exemption in 54F is given, then you have to proportionately reduce it. Following with me, people, till here? Great. 15 minutes. We have almost done till capital gains also. Good speed going on, people. Let's keep the pace. Next, we are moving on to the smaller chapter called IFOs, the provisions relating to premium on issue of shares. Last year, which they can test, people. After this is not there. So for your exams, this is critical. The provisions come and say, if you are a closely held company, which is going to issue shares to someone at a premium, if you're going to issue shares to someone at a premium, if the market price which is issued, is lesser, then you will have an IFOS income. So if the question comes and says that 100 rupees share was issued for 105, where the market is only 102, when the market is only 102, income tax will come and say you should have only issued for 102, you have issued for 105, and therefore the differential will become 3 rupees income of IFOS for the company. Notice, has to be issued at premium, has to be issued higher than market price. Through two conditions to be satisfied for you to tax it under the head IFOS. In the current year, whether it is issued to a resident or non-resident, it doesn't matter. Both are taxable. Very, very, very important. Next two provisions or adjustments relating to dividends chapter, people. Adjustment number 1 comes and says, if you are planning to issue any loans or advances to an individual holding more than 10% voting power, then whatever loans and advances you give to the shareholder will be deemed as dividend to the extent of the accumulated profits of the company. Please notice, you should give a loans and advance. It should be a private company. Person getting the loan and advance should have at least 10% voting power. If all the three conditions are satisfied, then whatever loan you give will be taxable to the extent of the accumulated profits of the company. If the question comes and says this loan and advance was given to someone else with which the individual has a tie-up, basically this individual has more than 20% voting power or is indirectly getting the benefit of the loan and advance, then also it is a deemed dividend. Next, and the most critical thing, people, which people tend to miss out when they do the word dividends, they forget to claim the interest expense. Income tax comes and says any expense which you incur on dividends cannot be claimed as deduction. Except for interest, but interest also can only be claimed up to a maximum of 20% of the dividend income. So if your dividend income is 100, you can only claim 20 rupees maximum. If you claim more than 20, it is wrong. You can claim less than 20, no problem, but you can only claim up to 20, and you can only claim interest. You cannot claim anything else. Please be mindful about this. This is your 5 heads of income, people. Yes, good adjustments done till now. Mark right now and tell me how many marks you have got. Put it in the comment box so that we can look at it each other. For those who have got full marks till here, amazing, you're going to do a great job in tomorrow's exam. For those who have not got good marks, no problem, people. Now you know the provision. Quickly go, mark it as important, and tomorrow before your day of exam, please make sure that you go and check this before you enter the exam hall. Yes, do that and you will definitely score a good mark. Moving on forward, people, we're looking at chapter 6A. Chapter 6A comes and says, first thing, that you cannot claim any chapter 6A on capital gains. The moment you do chapter 6A, please make sure that all the capital gains are removed from the provisions. You cannot claim chapter 6A capital gain on capital gains. You will ignore the capital gains component, and on the balance alone you will do chapter 6A. Please pay attention to that for an MCQ purposes. Very important. Next adjustment, people, is your 5,000 rupees preventive health checkup rules of ATD, which can only be claimed for both the buckets put together. For all members which you have, all put together, you can only claim 5,000 rupees as a preventive health checkup. You cannot go more than 5,000 rupees. But When it comes to other items, medical insurance and all those things, each bucket gets 25,000 ka limit. So self, spouse and dependent children get a limit of 25,000, parents get a limit of 25,000. Please note that this 5,000 is a part of this already, So the 5,000 is already included in this 25,000 and 25,000 ka bucket. Both the buckets put together, you can only claim 5,000 rupees. Next critical thing, people, is that when you are a senior citizen planning to pay any medical insurance, you can claim the number up to 50,000 rupees on the bucket. Unfortunately, if you don't have an insurance, then you can claim your actual expenses. But if the question says both insurance and expenses, focus on insurance, ignore the expense. You cannot claim the expense when insurance is already granted. Next, whatever insurance you pay can be claimed only if it is paid by cash, only if it is paid other than by cash. So insurance can only be claimed other than by cash, but preventive health checkup can be claimed even if it is paid in cash. So preventive health checkup, people, allowed in cash also. So this one can be claimed in cash. All other expenses should be made by permissible modes. You're not getting the deduction if you don't make it by permissible modes. Yes or no? Yes. Next, people, when it comes to ATG, your donation piece, income tax comes and says, when it comes to ATG, 4 categories are there, people. National all items and minister all items fall into category A, 100%. Any prime minister drought relief fund falls into category B, 50%. Any family planning and Olympic related donations will fall under category C, 100% with limits, and all other donations of charitable nature to organizations and trusts will fall under category D, 50% with qualifying limits. What are the qualifying limits, people? You will compute the whole total income. Ignoring your ATG alone. Compute the full total income, ignore ATG, and then do 10% of that. That is the maximum donation amount. We have done plenty of questions on this, people. I hope you remember this. This will give you the donation amount. If the donation is made in category D, then 50% of this is what you can claim as deduction. 50% of this is what you can claim as deduction. If the donation is made to category C, then no problem, you can claim 100%, but the donation amount is what will get restricted, and 50% of that amount is what you can claim as deduction. Again, I'm repeating myself, people, when you compute 10% of ATI, please notice that you do not include capital gains. You will remove all capital gains and find out your total income, and that you have to do 10% for your donation limits. Next, and the most critical thing, people, it will surely come in your exam called 80JJAA. This is one adjustment which is eligible both under default tax regime and under alternate tax regime. Important provisions which come and say that when you are going to have an employee, with what conditions, people? Employee should have worked for more than 240 days. Should have a salary less than 25,000 per month. And should receive only payments by permissible modes. Fourth item, should participate in PF. If 4 conditions get satisfied, people, whatever expense you have of salaries paid to this employees, which is paid to this employees, you can claim 30% of this salary as a extra deduction under 80JJAA. You can claim 30% of the salary as extra deduction under section 80JJAA. Please notice, if the question comes and says that they are into footwear industry, then it becomes 150 days. If they are into footwear industry, then it becomes 150 days. 4 provisions, people. You should be employed for more than 240 days in normal business and 150 days in case of footwear and apparel business. Should be paid less than 25,000 rupees per month. Should be paid only by permissible modes and should be participating in PF. If all the 4 conditions get satisfied, then whatever salary you are paying to that employee will be allowed for 30% of deduction, both under alternate regime and under default regime. Yes. Next, you have section 10AA, people. Section 10AA comes and tells that when you have section 10AA SEZ provisions, you can claim for the first 5 years 100% of export profit, for the next 5 years 50% of export profit, and for the last 5 years again 50% of export profits. Export profit means total profit of the SEZ unit into export turnover divided by total turnover. if you want to claim this 10AA provisions, people, please make sure that the return of income in the current year is filed on time. If return is filed late, then no deduction will be granted to you. Deduction will become 0. Second, if you want to have export turnover as a part of numerator, the export turnover should have been received by you within 6 months from the end of the financial year, either in India, or it should be received in a bank account approved by RBI outside India. Approved by RBI outside India. This is to be kept in mind. Second, that when you have any expenses which are incurred for the purpose of your exports, then the expenses will be removed both from export turnover and from total turnover. Both from export turnover and from total turnover. Notice, people, if the consideration is not received within 6 months, it will only be ignored for numerator. It will not be ignored for denominator. But if an expense is incurred, then it will be removed both from numerator and from denominator. Yes, yes. Last 3 things, people, for you, which is return filing provisions. First is the theory question. What happens if you don't file return on time, people? What happens if you don't file return on time? Quickly tell me. Yes, 1, you will not be eligible for carry forward of losses. You will not be eligible for carry forward of losses. Second, you cannot claim section 10AA. You cannot claim section 10AA. You will not be eligible for heading C of chapter 6A. You will not be eligible for heading C of chapter 6A, which is your 80 JJAA, 80 QQB, 80 RRB. 80 RRB. And finally, you will not be allowed for opting for alternate tax regime. You mandatory have to go for default tax regime. You mandatory have to go for default tax regime. These are 4 consequences from an income level. From an income level. From return filing chapter, people, you will be levied a 234F late filing fee. You will be levied a 234F late filing fee of 5,000 rupees in case your income is more than 5 lakhs, or 1,000 rupees in case your income is less than 5 lakhs. In case your income is less than 5 lakhs, and you will be levied interest under section 234A. You will be levied an interest under section 234A at the rate of 1% per month or part thereof for all the payment which is outstanding on the due date of return filing. For all the payment which is outstanding on the due date of return filing. So if your due date is 31st July or 31st October, on that date, whatever is still pending paid, on that you will levy 1% penalty, 1% interest. People, these items to be kept in mind for your 4-mark question. Consequences of filing return late. Repeat once again for me. No carry forward of losses. No claim of 10AA. Heading C of chapter 6A is denied to you. Can only opt for default tax regime, and you will be levied a late filing fee of 5,000 rupees in case income is more than 5 lakhs and 1,000 rupees in case income is less than 5 lakhs. Finally, whatever payment is outstanding on the due date will be levied an interest at the rate of 1% until the return is filed. Until the return is filed. Amendment of current year is point number CC, which talks about what happens in case you don't link your PAN with Aadhaar, people. In case you don't link your PAN with Aadhaar, the PAN will become inoperative. The PAN will become inoperative, and the following consequences will happen. You will not be given back your refund. You will not be eligible for interest on refund. TDS will happen at a higher rate of 20%. TCS will happen at a higher rate of 5%. TCS will happen at a higher rate of 5%. And if you go and report this PAN number to any person, then the PAN will be treated as invalid, and therefore you will be levied a penalty of 10,000 rupees per default. You'll be levied a penalty of 10,000 rupees for default. 5 items for you, people. First, no refund will be granted to you. No interest on refund will be granted to you. You will be levied a TDS at a higher rate of 20%. You will be levied a TCS at a higher rate of 5%, and you will not be allowed to show this PAN to someone. If you show this PAN to someone, then you will be levied a penalty of 10,000 rupees. Last 30th adjustment for you, people, is updated return provisions, which comes and says if you are going to file an updated return post 12 months, but before 24 months, whatever tax payable you get, extra 25% you will have to pay. Extra 25% you will have to pay. But if you pay after 12 months and before 24 months, after 12 months but before 24 months. Once again, let's start over again, people. If I'm coming and saying that your assessment year is closing right now, within 12 months from the end of the assessment year, if you file an updated return, you'll be levied an extra payment of 25%. And if you're going after 12 months but before 24 months, you'll have to pay an extra payment of 50%. Yes. So if your assessment year is here, for the assessment year up to 12 months, you'll have to pay extra 25%. And from your assessment year to 24 months, you'll have to pay 50% of whatever amount is given. So simply take the amount which is demand payable as per the question, multiply an extra 25% in the first 12 months and multiply an extra 50% in the next 24 months, and that is what the final payment to be made in updated return. 30 critical adjustments for tomorrow's exam, people. Yes, focus on these 30 critical adjustments. There are other provisions definitely there in your syllabus, but I am extremely confident that you people are completely aware about all those other adjustments. Those are things which you have done time and again. These are some small things which you may have missed out to remember for your exams, but now that you have gone through this video along with me, you already know all these things. Yes, so you have to go happily in the exam and look at this adjustment, smile to yourself that you already know the provisions, and write a beautiful answer and come back so that examiner just looks at it, puts a tick marks and give you the 15, 10, 8, 6, whatever the mark weightage given to you. Get back an exemption, people, and score a happy mark in your group 1 to go forward to your group 2 with such confidence that you will clear the CA intermediate exams. That is all that I want to tell for today's session, people. I hope you're having a great time reading, and I'm very happy that you're going through this exam. Come back strong and we will all party together once you come back. If you still have any doubts, people, feel free to drop something on the comment box, and I will try my level best that today I be completely available to help you with all the queries which you have on your comment sections. Yes, that is all for today, people. Take some rest, have some good time, prepare properly, and enjoy what you're doing. Take care. Bye bye.